for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today is Tarun Sawhney of Triveni Engineering. The sugar companies have largely come out with a fairly decent uh, outlook about what the near to the medium term holds in store. The ethanol policy helps, but there is, of course, more to the sugar companies than just ethanol. Sugar pricing and what could happen to the sugar segment profitability as well would be very interesting to know. Triveni Engineering, of course, had already announced a capacity expansion, which they have enhanced, as I understand, over the course of the next 18 months. Let's get him into the conversation to talk about all that's happening within the industry and for Triveni as well. Tarun, great having you. Thanks so much for joining in, and I hope all is safe.
Neeraj, thank you very much. Lovely to see you, and thank you for having me on your show.
Now, the pleasure is ours. Tarun, so let's talk about. Let's talk about how do you see the space as it stands? Because for you, for example, Q4 might have been, how do I say, not as per the high standards that you had said, because your numbers came in slightly below what people were estimating. Or would you reckon that these seasonality factors notwithstanding, the undercurrent for both earnings growth as well as profitability seems to be on a strong footing for the next 2-3 years?
So, Neeraj, two things. I mean, one commenting on the Q4 results, and then, of course, looking at the future, because your question really is in two parts. I have to say that our numbers in Q4 are reflective of the sales quotas for sugar that were given from the central government. So, as you know, sugar companies around the country are given monthly sale quotas by the central government, and they're expected to sell up to a maximum of that number. Now, that number, when Q4 was compared to the previous corresponding quarter, the total number was lower, and therefore the revenues were lower. But in terms of margins, etc., we were very happy with the business. I think what we can see today, reflecting on Q4, is actually a very reasonable growth and stabilization within the sugar sector. And I think for us, seeing that is very, very important, okay, in terms of generating free cash flows for the company. So I would say that the only reason why you have any slight shortfall in terms of the revenue expectations is simply because of the quotas that were given out by the central government. And in their, on their behalf, I'd like to comment that it is, frankly speaking, a COVID-impacted quarter. So you've got vacillating demand across the country because of lockdowns that are happening in various states, in various areas, in consumption centers, etc. And that still has a small impact. Coincidentally, Q1 of this fiscal year has been very different. The releases by the central government have been aggressive. They have been back to normal levels. I, for example, look at a healthy increase in sugar consumption this year, sugar year 2021 versus the previous corresponding year across the nation. All very positive things and auguring very, very well for the industry going forward.
No, sorry, by sugar in the year 2021, you mean up till October or up till September?
September, that's right.
Which means the first half, which is, how do I say, April to September of the current year, you expect the sugar consumption to be higher than April to September of the last year. Naturally so, because of the massive lockdown then versus now.
Absolutely. Or even if you take the full sugar year, which starts on the 1st of October and ends at the 30th of September, and the two corresponding years, one seriously impacted by COVID, and the other, of course, this year, impacted by COVID, but we've seen a resurgence of demand as far as our industrial customers are concerned, be it the beverage companies or the FMCG companies. Across the spectrum, there's been healthy growth. And I think that is reflective of a normalized demand and normalized growth for times to come. Again, auguring well for sugar consumption across the country.
We've had a bit of a stop-start, Tarun, in India as of now. I mean, as we speak, for example, the whole Satara district is under a lockdown. It might be happening in some other parts as well. So much as people anticipated that post-June we will return to near normalcy, it's not quite happening. Hopefully soon. Could there be a change in the overall consumption numbers that people believed would happen from now on, say until Diwali, or would you reckon that the impact is minuscule?
Well, I'd like to say that I think the consumption for this year, leading up to the festival season in 2021, in our projection is going to be fairly normal. It's a renewed demand and potentially higher than the demand that we had last year, where we were still very uncertain about COVID while we were out of the general lockdown. And although frankly speaking, the festival season last year in 2020 had the highest numbers in the country in terms of COVID cases. We peaked in September, October. Frankly speaking, I think this year the management and the understanding of COVID across the nation is better. Sure. We have a massive vaccine rollout that's happening, etc. All of these things are pretty positive. So I think that we're going to have a reasonably robust demand leading up to the holiday season.
Okay. What about pricing? And I know that the industry is asked for the MSP to be raised, as and when that happens. If that happens, that's great. But global prices, there is a lot of email that we received, Tarun, about how the Brazilian output estimates have been lowered. Something else has happened. Thailand has had these issues, etc. Would you reckon that it will show up in the way sugar pricing behaves over the course of the next 2, 3, 6 months or 9 months? Do you believe there is an upward pressure on prices?
So, Neeraj, that's $1 million question, and there are multiple things at play, frankly speaking. Let's look at the dichotomy that exists between domestic prices and international prices. Starting with international prices, you've had weather and you've had crop estimates that have led to a massive increase in raw prices and white sugar prices traded internationally. This has been predicated on the back of very concerning news about rainfall and drought in Brazil, especially in the center-south region. You've also had negative news that has come out of Thailand and several other important sugar exporting countries around the world. All of this has, frankly speaking, led to an increase in sugar prices. And of course, in Brazil, you have the added factor of strengthening of crude prices and therefore a renewed demand for ethanol, which is the obvious second product or the second option or the other option rather, as far as sugarcane is concerned and the processing of sugarcane is concerned. So, that's led to a healthy increase in international prices. Domestic prices have remained subdued, and they've remained subdued because we have more sugar than we can consume in the country. We've had a very successful 6 million ton export program for this year. The government has spoken about an additional export program for next year. It is probably the last time that the government of India will be able to do it, because we will be subject to WTO restrictions as of January 2023. So if we do have a export program that gets announced in this quarter, leading up to the next sugar year, I think the timing is great to announce it. You have high international sugar prices. You don't have to offer the 6,000 rupees that was offered last year. You can there's talks. In any case, the government has lowered the 6,000 rupees per metric ton of farmer subsidy to 4,000 rupees per metric ton of farmer subsidy. It's already made that decision. So we don't know what the farmer subsidy will be for a subsequent export program. But if that were to happen, we would then have a great balancing that's happened in the sugar balance sheet across the country. That's point one. The second point is that come October, November, we will know how much sugar is being diverted towards ethanol. This is very important. You've got, and I'm sure we're going to be talking about ethanol during this segment, you've got large capacities that are coming on stream, including at the Triveni Group, but across the country. It will lead to a higher diversion of sugar towards ethanol. This year, the year under review, we can estimate almost 2 million metric tons of sugar that has been diverted towards ethanol. Next year, I think we're looking at a higher number, especially if we have higher blending percentages of 12 and 15% in certain states across the country. We could even look at 3 million metric tons of sugar being diverted. It's a serious number. And as we move to 20% in 2025, E20 in 2025, we could look at 6 million tons of sugar being diverted. And therefore, okay, I know your question was where do sugar prices head in a 3, 6, 9 month period? And I'm giving a slightly broader perspective towards that. I think things are looking very, very healthy as far as sugar prices are concerned. I would hope that the price increase is gradual. We don't want any huge bumps.
Yeah.
We don't want any massive increases because that leads to other problems. Sugar being an essential commodity, it leads to knee-jerk reactions, etc. We certainly don't want that. An inching up of sugar prices definitely on the cards.
Sure. So my question would therefore be, and would you reckon that your average realizations for sugar, the new sugar season, which is October onwards this year, or let's say FY22 and FY23, the next 24 months, would you reckon your average realizations would be 10, 15, 20% higher than what they are right now in India?
Neeraj, it's very difficult to put a number on it because there's a big difference between 5, 10, and 20%. Huge difference. Okay, a huge difference in terms of profitability or in terms of margins. Let me not say profitability, but let me just talk about margins.
Sure. What's the sensitivity? Yeah, sure.
Right. The sensitivity to operating margins is massive with those 3 numbers that you've just taken. You also have to bear in mind that that we're going to have a normal monsoon. Now, we're in the middle of the monsoon season as far as India is concerned, provided we don't have any hurricanes that traditionally come in from the east. We don't have any inclement weather through the course of the grand growth period of sugarcane. We will have a fantastic crop. And therefore, if there's an increase, it will be a balanced increase. And it'll be an increase that is certainly in the hands of the central government. There's been talk, there's been enough industry bodies as well as state governments that have written to the central government requesting the central government to increase the MSP from 31 to 33 rupees, even beyond. I mean, the industry, of course, has asked for a much higher number, but it was contemplated in the press that the government would consider potentially 33 rupees, if not a little bit higher. Now, I think that is a tempered increase. And the tempering of that increase is also in line with potential increases in cane price that may happen for next year as well. As we know, the FRP has been raised slightly by 5 rupees a quintal. And there is a possibility that the state advised prices that exist in certain parts of the country, including Uttar Pradesh, may also go up next year. You will be coming up to an election year. Sugar cane prices, have remained fairly constant over the last 3 years, and therefore there may be some increase in those prices. But it makes sense to have an increase in sugar cane prices only if you have higher sugar prices.
So what's the sensitivity?
Exactly, and otherwise it leads to arrears, and arrears are a huge problem.
Sure. Okay, so Tarun, what's the sensitivity then? I mean, to margins. I mean, if indeed the realization, if indeed the MSP were to increase from the current 31 rupees, if I'm not wrong, to 33, correct, then yes, what does it do to margins? The sugar segment margins.
So if basically it's a direct increase in operating margins, okay, and that gets tempered by any increase in potential sugarcane prices, right?
Got it.
So without knowing what the sugarcane price increase is, if any, if there was none, then it would be a direct increase in operating margins.
Okay. Fair call. Now let's talk about ethanol, because that's the big thing, right? Everybody's talking about it. You had a capacity expansion plan already in place and you've enhanced that further. So if I'm not wrong, your capacity moves up from, I've written down the numbers, 380 to another 140 and then another 200, right? Can you give us some timelines around these?
Certainly, it's slightly different numbers. Our existing capacity is 320 kiloliters per day.
Okay.
So we produce approximately 11 crore liters at this particular point in time across our 2 distilleries, which actually operate on best-in-class metrics. And if you look at if you do the mathematics behind that, we're operating in excess of 330 days, which are fairly incredible numbers at 100% capacity utilization, probably the best in the industry. The company and its board, the company's board has approved an increase in capacity and the addition of 2 new distilleries, a 160 kiloliter distillery, which is being set up at our sugar factory at Millet Narayanpur. This has the capability of operating on cane juice and has a bolt-on package and the possibility of using grain in the off-season for also making ethanol. And we have a grain distillery coming up at our alcochemical facility in Muzaffarnagar of 40 KLPD. So that's a 200 KLPD. We expect that to be operable by the end of this calendar year. So in Q4 of this fiscal year, we expect to see commercial production from both facilities. That will increase our capacity from 320 KLPD to 520 KLPD. And in addition to that, the board of the company in its last board meeting has approved certain expansion projects. It's actually low-hanging fruit. The addition of several columns, the addition of certain technologies, etc., to further enhance and optimize all of these 4 operating units at fairly low levels of capex. So the capex for the next phase is 100 crores, and we will be expanding our capacities by 140 KLPD. So we anticipate that within the next 12 months, we will have the Triveni Group's ethanol, or rather distillery capacity, because we will not necessarily divert everything to ethanol, but our distillery capacity rise from 320 KLPD today to 520 KLPD by January of next year to 660 KLPD by summer 2022.
By summer 2022, you mean January of 2023?
No, by this time next year.
By this time next year. Oh, okay. So effectively in financial year 23, you would have all of your 660 KLPD of distillery capacity operational. Correct.
We forecast that by the end of Q1 of next year, we will have 660 KLPD operable.
660 KLPD, yeah. Okay, by Q1. So at least from Q2 onwards. Okay. So can you so forget the pricing of ethanol and the different grades, etc. But can you tell us the math that how much sugar will you sell till these capacities come on stream, and then in FY23 onwards, Q2 onwards, how does this math change for you? Because then the inventory of sugar issue for you also ceases to exist or becomes less important because so much of sugar will get diverted to ethanol any which ways.
So Neeraj, it's impossible to give you that question and to give you that answer rather, and I'll give you the reason why. We at Triveni we'll have the optionality of utilizing either sugarcane juice or molasses as one input stream, or using grain. So what we use to make the ethanol will be determined by the government's price announcement that typically happens in October, November. So based on the pricing differentials, we will use different feedstocks to generate the same quantity of ethanol.
Assuming the same pricing that stays right now, the same differentials stay. Yeah. Then how does it go? You would then be using molasses-based ethanol more?
Absolutely. We would certainly be using juice and B-heavy molasses across all of our facilities. We would be looking at certainly much higher levels of diversion of sugar towards the EBP program, because the EBP program, with the current differentials at the current pricing, when I say current pricing, I'm talking about current pricing of sugarcane, current pricing of ethanol, because those are the 2 important components in this analysis. We would look at doubling probably of the quantum of diversion away from sugar towards ethanol, which is quite aggressive, frankly speaking. And
what are those numbers there, Tarun? Sorry, just wondering, what are those numbers there? What is the current diversion?
Absolutely, I'm going to dig them out for you in about half a second. You see, we diverted this year. We diverted 7.5 lakh quintals of sugar towards the EBP program. So we're looking at least 15 to 17 lakh quintals of sugar, maybe even, it really depends. It could be even up to 20 lakh quintals of sugar that gets diverted. Now that's pretty substantial. That's a fifth of our production.
Sure, sure.
And that's a very substantial number for Triveni Group. It certainly looks, in terms of cash flows for the company, it's a huge positive, the ability to be able to do that with the current differentials in place.
Got it. Okay. Now, Tarun, in an earlier interview to somebody else, I heard you say that while I believe the margins are what, 12%, 12.5%, but I heard you console margins. And I heard you say that you believe that for the next year, which is the current financial year, the margins could move up, but because of the non-sugar and the and of course the ethanol business as well, but the non-sugar business, the engineering business, I presume, is in ship shape, and that might contribute to margins. I'm taking it that if indeed this year, which is FY22, benefits out of the non-sugar business,
yes,
and if indeed, of course, FY23 onwards, if more sugar gets diverted into ethanol, and I presume ethanol is a more margin accretive segment than sugar, then do you reckon that over the next 24 months, your margins are slated to be on a higher trajectory? And if so, what's the blue sky scenario?
Well, I'm not going to give you numbers, but what I would happily talk about is why I said that in a previous interview. I see a huge resurgence in our non-sugar businesses. So we've talked about ethanol, and we've talked about the timeline when the ethanol play comes in for Triveni, which is very much in the immediate future. There's an impact in this fiscal year, but there's certainly a much bigger impact in the next fiscal year. In addition to that, we have two reasonably sized engineering businesses within Triveni Engineering. We have a very robust water and wastewater treatment business, and we have a power transmission equipment business, both of which have actually closed out the year very, very well. So we've seen order booking increase in both businesses. We've seen our inquiry books balloon in both businesses. We've seen the addressable sectors actually we've seen a lot more activity in those addressable sectors for both our power transmission and our water business. And I'll spend a minute talking about each individually, because they actually are very, very different businesses. Within our water sector, which had been impacted by COVID, and the impact of COVID was simply that there were no tenders that were closed out. We're seeing a lot more flurry of activity. We reported in our Q4 results that we have received we have won a tender for the Maldives government in excess of 150 crores. It's our first international project. It is accreditation for Triveni Group by an international government, giving us the possibility of doing a very important water treatment project for them. It also shows that we can actually address our addressable market, which is purely domestic leading up to this point, and we can certainly explore the boundaries and see within neighboring countries what are the various water projects that come about. And we're in a good place because we have the prerequisites, we have the experience to be able to perform those projects. Yeah. Domestically, Namami Gange, which is the central scheme, as well as other variety of state government schemes, are on the very brink. Many projects are on the brink of finalization. So we expect that this year there'll be a lot of activity, not just order booking, but also leading to revenues where there'll be work required on the ground. We've had a year and a half, 18-month period where there's been a complete hiatus. There's been no new projects that have been announced, no new projects that have been awarded within the water sector. And water is a increasing problem for our nation. And so I think that is something that one can expect this year and leading into next year and beyond. Again, what that means is that the more business that you have, the more business, you see, these are businesses where you have to first meet your operating costs. Once you met your operating costs, you have margin expansion that happens. And we see that we're in that lovely position where the operating costs are certainly met. We've shown our operating margin growth in our water business, and going forward with hopefully more projects that we expect to win, we can certainly see that expand. Within the power transmission business, very similar state of affairs. We've seen an impact of COVID. So we saw Q1 of the last fiscal year, fiscal 21, which was seriously impacted by COVID domestically and internationally. We had a lockdown that lasted for 2/3 of that quarter. It had a cascading impact even for the remaining operating month and for Q2 as well of last year. But all of that catch up has happened. We've closed out extremely aggressively in terms of our order booking growth, with great visibility, not just domestically, but also internationally. You've seen a weakening of the rupee, that's helped exports. You've seen huge competitiveness happening in Europe and in North America. And therefore, you've seen global OEMs come to firms like ours and request our products because the products are of global quality.
Sure.
And we're meeting, there are two things that we're doing. It's not just about price, because we're not necessarily, that's not the only consideration. It's also about delivery times. So our management of our supply chains and the ability to be able to execute orders much faster than our global competition, and this even on a delivered basis, combined with an attractive price, is positioning us extremely attractively as far as the OEM business is concerned. The other thing, of course, is that there was a hiatus for repair and replacement, which is an important high margin constituent of our power transmission business. Again, we're seeing a huge resurgence there, domestically especially, and also internationally. So all of that augurs well certainly for margin growth, and also, of course, for revenue growth going forward.
Well, okay. Well, we wish you all the best for that then as well. But since you are not going to give me numbers, I'm not going to ask you a numbers question. But last couple of questions, more about the industry and what about Triveni do within that, right? So one, if you are indeed, all the businesses are looking like doing better revenues, better margins, and thereby, I presume at some point of time, or maybe immediately, better cash flows, because I think you've shown some glimpses of that even in the last 18 months. What do? You can't expand sugar capacity, I presume. You already announced the ethanol capacity expansions that you have announced. With the cash flows that you have, what do you do? I mean, or what does an average sugar entrepreneur do? Do you dividends and buybacks? Would that be the way you would go? There is certainly a question to be asked. So,
tough question. Let me just say that these decisions are taken by the board. Okay,
sure,
the board thus far has had a very sound policy. So what the board has directed the company to do is to pare down debt levels. And if you see our debt levels, they're at historic lows as far as Triveni is concerned. We have 300 and I'll give you the exact number. We have approximately 350 crores of long-term debt. All of it is subsidized. All of it is basically at concessional rates of interest. Our term loan cost of funds is 4.77%. These are very, very good numbers. So frankly speaking, if we're expanding on the ethanol side, we may take on a little more debt. And there will be, of course, some amount of our own cash flows that will be utilized for that. And the reason we may take on a small portion of that is because you're getting it at hugely attractive rates. Right. We've also seen a compression in our working capital requirement as we utilize our own funds. And therefore, the cost of funds for the group as a whole has declined a lot. So there is certainly an attraction to be able to do that, so that your operating margins and your overall margins actually for the company improve quite dramatically. And as free cash flows expand, there is the possibility of investing in a lot of other areas. Like the government of India, I'll give you some examples that seem attractive, although we have not deliberated on them at this particular point in time, or come up with any specific projects. The compressed biogas market, for example, which utilizes another sugar byproduct. Hugely attractive area. I think the CBG, the natural gas, the clean natural gas economy in India is going to get a huge boost. It will also lead to opportunities within the hydrogen economy, which the Honorable PM has spoken a lot about. So, great attractive ways of looking at clean energy coming out from an agri product, substituting for petroleum-based alternatives. And I think that is enormously attractive as one such area. The challenge, of course, is that it is all dependent on government schemes. the pricing, is it for 3 years, is it for 5 years? So there are some debates happening between the industry. I myself have been involved in pushing this agenda along, because I think it's a huge opportunity to promote the green agenda for our nation during the course of this decade. Huge sector of opportunity over there. There is obviously future in ethanol. Clearly, when we look at E20, I think what is hugely encouraging over the last 2 weeks are the announcements that we're going to be experimenting with flex fuel technology. There are 3 sites in Maharashtra that are going to have E100. There are going to be a bunch of cars and two-wheelers that are going to have bolt-on flex fuel engines fitted out. And we're going to see the emergence of a flex fuel policy coming in 3 months. I think that was announced by Minister Gadkari. Again, that means that the quantum of ethanol that is required on a consistent basis has to increase quite substantially. The government of India said 40,000 crores. I think it'll be higher than that. The investment in the next few years will be 45,000 crores at least. So companies like Triveni will certainly participate in that. I can't give you a number, because I think that there's a lot that depends on this year's policy and this year's pricing. And of course, the emergence of this E100 policy when it happens. But these are some of the logical areas for expansion that we look at. And I'm not even talking about our engineering businesses, where we see huge possibilities. The water business, for a variety of new projects that we take on, requires capital from the company to be able to execute those projects. We see growth in our power transmission business, although in that business, the quantum, the capital requirement in that business is considerably lower. Nevertheless, there is some, because we're seeing huge growth figures in both the engineering businesses as well. So, I would say we would look inwards. There's a lot of possibility inwards, Neeraj, in terms of investment in allied businesses and in the businesses that we are currently in.
Got it. Then my final question: would it be safe to say that, and wear the hat of not somebody who's manning Triveni, but an average sugar company, would the earnings stream of an average sugar company look, or can it look materially different over the course of the next 5 years, as companies like you, but some of your peers as well, generate cash flows which were kind of absent in the last decade, so to say, and these newer avenues open up and they might be able to invest into those? So yes, they are all linked to the basic commodity, but they are an alternate revenue stream, so to say. Do you reckon that will happen for the space at large?
I think so. And Neeraj, I think it's a no-brainer. Investment into allied tech, correlated technologies, ethanol, etc., etc. These are logical steps. For the average firm, some of them have distilleries, some of them don't have distilleries. Logical step is to add a distillery, right? The moment you do that, you have a balancing of your own cash flows that happens. You have a huge possibility of immediate improvement in your balance sheet and your ratings and your cost of funds, etc. So the cascading impacts of being able to do that. For those who do have distilleries, those distilleries were established based on sea molasses capability. As you are looking at diverting more sugar, you can expand and enhance those capacities. It's already started happening. But for the middle of the pack companies, when you see them embrace the opportunities that are available, you will see a material change, as you very rightly said, to their balance sheet and their cash flows.
Fair call. Tarun, thank you so much for speaking to us today. Lovely having you, and all the best for the times ahead.
Thank you, Neeraj. Thanks very much.
Thank you.